The question time is absolutely terrific. That's probably because CEO Joe Calhoun has lots of information and lots of opinions. Steve, what's the question for today?
Yeah, asking about a high flyer here. Nvidia, over the last 12 months, the stock's up over 200%. One of the largest stocks in the S&P 500 keeps going like this, it's going to be number one. But how crazy expensive is Nvidia at this point as a stock, Joe?
Well, first of all, I'm an old guy, so I am opinionated, but I also have the benefit of a lot of experience. And I remember a lot of people are comparing this period with AI stocks to the dot-com boom around the turn of the century. I don't think it's really exactly the same, obviously, and in some ways it's quite different. A lot of the companies back in the dot-com era, they weren't profitable. They just weren't very good companies. But, it had .com in the name or whatever, and so everybody bought this stuff, and a lot of it just went to zero. I don't think that's what we're looking at here. I mean, Nvidia is an incredibly successful company. I mean, look, I'm going to be perfectly honest and say I missed it. We looked at the company a couple of years ago after it had a big run up because of crypto mining. And we kind of rejected it because we thought the crypto mining stuff would fade, and it did. And the stock got killed. And we just kind of forgot about it, to be honest. And now it comes along with another application for their chips, and it's gone to the moon. And yes, I regret that, but I can't change it. And so the question for everybody, we're not the only people that miss it. So the question is, what do you do now? Do you go out and buy this thing? Like Nvidia, like I said, it's a great company. They have gross margins of 75% and operating margins of 60%, which are just stunning. They generated almost $40 billion in free cash flow in the last 12 months. Just an incredible number. Revenue up 262%, earnings up 630% over the last year. But I'd have to say that I think the valuation probably takes into account all that, plus a whole bunch more. What I did was I took a look at price to sales ratio. The price to sales ratio right now is 40, which, just for a point of reference here, the price to sales ratio for the S&P 500 is 2.7, and that's considered very high. So a price to sales ratio of 40 is kind of out of the ballpark. It's not even close to anything. But regardless, like I said, it is a good company. So how expensive is it? And can it grow its way into the valuation? Because that's what I keep hearing people say. Well, it's going to grow enough. It's going to grow into it. Well, I would just point out that quarter-to-quarter revenue gains peaked in the third quarter last year. Now, obviously, we're coming off a lower base, but if you look at it, it's declined every quarter. You had quarter three 2023, revenue was up 87.5% from quarter two. But quarter four, it was only up 34. Quarter one, it was up 22. Quarter two, which was just reported recently, was up 17. And next quarter is expected to be only up 9. Now, look, a 9% quarterly growth rate is still a stunning number. That's a big number. And revenue this year is expected to be up, for the full year 24 is expected to be up 50%. That's a big number. 2025 estimate is for revenue to be up another 33%. And I want to emphasize here too, I'm talking about revenue, guys. This is not even earnings. This is just revenue. So what I did was I said, okay, right now it's at 40 times sales. And what if it continued to grow at various rates? And so here's what I found. If it continued to grow at 50%, which is going to, expected to do in 2024, by 2029, it would have more revenue than the entire semiconductor industry does today, which I think is kind of ridiculous. I think semiconductor revenue probably continues to rise, but is one company going to do more than the entire industry right now? I don't think that's going to happen. So let's take a little more realistic approach and say, what if it continues at that 30% rate expected for 2025? Well, even if you do that, you go another 4 years, the stock price, even if the stock price doesn't change, you'd still be selling for 5 times 2030 sales. It's way, way too high. If the growth rate falls to 20% a year, by the way, that you'd be selling at 8 times revenue for 8 times 2030 revenue. Look, it's a great company. There's no doubt about it. They hit on something. But look, when you have margins of 70%, somebody's going to come along and compete with you. I am totally not convinced that Qualcomm, Intel, Micron, Taiwan Semi, all these other semiconductor companies that nobody can come up with a chip that's going to compete with Nvidia. Maybe I'm wrong about that, but I think the other question here is what happens to these orders for these chips as companies who've been spending a lot of money on these things, as they start to realize what the return on investment is. And my guess is the return on investment is going to be pretty disappointing. We'll see. I keep looking around for, what are people going to use this thing for? What are they going to use these large language models for? I think there's some serious limitations there. So look, it's one of those things where it's not as expensive necessarily as Cisco was in 2000, but I would also point out that Cisco's peak stock price in 2000 still hasn't been exceeded. And I think that's the problem when you try to get into the front end of these things. If you don't catch it early, you can really make a big mistake and be sitting in something for a very long time waiting to break even. So I think NVIDIA is a great company. If you own it, I'd probably be thinking about trying to take some off the table. And if you don't own it, I think you're going to have to just wait and see what happens with it. I think there'll be better opportunities from AI in other areas. So that's what the attitude we're taking is wait and see.
Great advice, Joe. Thanks. And if you've got questions for Joe, put them in the comment section down below.